Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. This is Daniel Lam, your host for the podcast. I remember the title of our annual outlook a few years ago. It was called To Prepare and to React. Now, this is really about how one should be patiently waiting for their chance to strike when the stars are all aligned. Well, yesterday in this podcast, we discussed how inflation was the root cause of the very shaky asset prices year to date, and how inflation may finally be topping out in the US. Overnight, the New York Fed survey showed that there was significant decline in the expectations for US inflation 3 years ahead, dropping to 2.8% in August, which was down from 3.6% back in June. This led to solid risk-on moves overnight by risky assets, running up to tonight's pivotal US CPI figure. So looking at the FX space, are all the stars getting aligned here? Is it the time for investors to prepare and to react? Well, a number of the major currencies are beginning to fight back against the king dollar at the very same time. So, for example, the euro dollar. Technically, it seemed to have formed a base around 0.9850, and it may challenge the resistance at 1.04. The ECB's 75 bips rate hike triggered this rebound, and now they're calling for rates to potentially rise to roughly 2% if needed. Also, as we talked about a few weeks ago in this podcast, positive development on the Russia-Ukraine war front would alleviate the pressure on this currency pair. So over the last few days, Ukraine's advance in the Kharkiv region is likely to help the euro dollar. Now looking at pound sterling. Pound sterling rose on expectations that UK inflation is likely to remain high, which would prompt the BOE to continue raising rates into the first half of 2023. Technically though, the pound looks weaker than the euro, and the pound faces resistances at 1.18 and 1.23. The yen is one major currency pair that does not look like it would be strengthening significantly against the dollar. Like we discussed last week, Japan does not seem to suffer from as much inflation as many other major economies. Thus, the BOJ is likely to stay loose with their monetary policy, and interest rate differential between the US and Japan is likely to stay. That's all from me today. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.